You will learn exactly how to master market structure in 3 simple steps using this video. And stick around to the end because I will show you an example of how to use it to take a profitable trade. Now, let's take a look into all areas of market structure, starting with step number 1. There are 3 steps to go from beginner to advanced. Let's start with the simple stuff, which is simple market structure. Usually, price is going to make a series of higher highs if it's bullish, higher lows, higher highs, higher lows, and higher highs. This is how you would understand if price is bullish, because as we can see, essentially price is low, high, higher low, meaning this low right here is higher than the previous low, and then a higher high, meaning this high right here is higher than the previous high. So now we've established that we are in a bullish uptrend. So realistically, we should be looking to take longs. Then we have a higher low again, higher high, higher low, and higher high. That is market structure in a bullish scenario. Now let's take a look at that in a bearish scenario, which is going to be the exact same, but just in the opposite direction. Now we can clearly see that it is pretty much the exact same. We have a high and a lower high, meaning that this high is lower than the previous high, and then lower low. This low is lower than the previous low. Again, lower high, lower low, lower high, lower low. And so what we would be expecting to happen is for price to make a return up here and then lower low, up here and then lower low, up here and then lower low, until at some point the trend will shift, which we're going to get into later because that is advanced market structure. So that is essentially how you can perceive the basics of market structure. Each one is a breaker structure, and breaker structure. But that's textbook, right? What does it look like usually? Usually it looks something like this. We have a low, high, we break structure, then price is going to pull back. And then we have some sort of shift, and then we break, and then we kind of pull back, shift, break, pull back, and then break. Usually price is going to look something like this. This is realistic market structure, but the same thing applies. It's no different. We have a high, we have a low, we have a higher high, and that point right there is a break of structure. So we can now confirm that price is in fact bullish. Break of structure up. Then what does price do? Price starts pulling back, right? But understand, as long as this low remains intact and not broken, it can come as low as it wants to, until eventually it will have a new higher high, right? Break of structure again. Let's mark that out. There we have a new break of structure. So we've continued bullish. Nothing has actually happened. And then we've essentially pulled back again, like so. Again, most important part of this is that this low, now our new low, doesn't get broken. And then we have our new high. You can see price comes back, doesn't take out the low, and then reverses and takes out the high. At that point, we have a higher low and a higher high. Same again, higher low and then higher high. That is typically how market structure will actually look in the markets themselves, which we're going to go and take a look at this moment in time. The key differentiation to understand market structure is using your swing points. Your swing points are the external pieces of the structure from where price reverses from. So what does that mean? This right here, you can see that price was coming down and we reversed from it and put in a high. You can see price then put in this high and then reversed to put in a higher low. Then we reversed again to put in a higher high. We reversed for higher low, reversal, 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 and then likely push down, push up, which would be a reversal and a reversal. So your structure points cause price to reverse. Now let's go and take a look at that on the actual charts themselves. Now you guys kind of understand the theory behind it. So here we are on GBP USD on the 4-hour time frame, and you can see we have established quite a bull trend. But how do you actually select the market structure? So let's go ahead and start all the way down here. Let's start first by mapping out our high and our low, right? Then essentially you can see the price break structure, break of structure to the upside and puts in a higher high. From there, you see that price pulls back, which is a reversal, higher low. Then from the higher low, price reverses again and puts in a higher high, which is a new break of structure to the upside. Break of structure up, then price reverses, pulls back down into an area of demand, which is supply and demand. That's for another lesson. Price reverses, puts in a new higher low, comes up, doesn't put in a higher high because it only breaks with a wick. For a break of structure, we need to see a break and close with a body. And this is only a wick, so this is not a high. Then we see price does this, and then this is our high, and then we pull back again. Now notice in between here, we have loads of these little pieces of structure. For example, price kind of puts in this low, and then we have this kind of like internal structure, right, that looks like this, right? But we're only interested in the points in which price actually reverses. That's what I was explaining when I explained what it looked like in the real market in of itself. Let's continue. Let's show more examples. So again, we're going to go back to green, and we can see then price has had what? A new break of structure to the upside when the candle closed above it, which was this grey candle right here. From that break of structure, we have a higher high, we pull back again into demand, and then from there we put in another higher high, break of structure. And again, our mission with this, we want to be looking for longs. And so we want to be looking for longs in an uptrend. Then we're going to be looking to buy in here, buy in here, buy in here, right? We're looking to take longs with the trend because the trend is your friend. Always be trading with the trend. So we have the 4 hour break of structure now, and then essentially price pulls back, which is a higher low, and then we put in a new higher high again, higher low again, and then a higher high again. And so we have a couple more breaks of structures to the upside, which continue the bullish structure, break of structure up, and then one more break of structure up again. So you can see, if we just now zoom out and take a look at what that looks like, those marked out in green right there are our structure points, right? Let's add one more down here so it's super clear. Those right there are our structure points, and notice how each structure point is higher than the previous structure point, right? High, low, higher high, higher 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 low, and higher high. So very clear that we have an uptrend, a bullish uptrend right now, which is exactly what we just went through before. That's lesson number 1, and that's pretty much the beginning stuff. Now we're going to get into the interesting stuff, okay? Now, this is where things get advanced. Now we're going to be taking a look at multi-time frame market structure. That is to say that at all times, market structure appears differently on other time frames. So for this example, we have in red, which we're going to call the 4 hour, and in black, we're going to call it the 15 minute. Now, as you can quite clearly see, the 4 hour is in a clear downtrend starting from the high up here, marked out in green, by the way. High, low, lower high, lower low, lower high, lower low. Just as we spoke about before, the swing points in which market actually reverses from. And then inside of that, if we was to perceive the same price action on a 15-minute time frame, here's what it's going to look like. Okay, mapped out in blue, now we have the 15-minute, which is to say we have a high, a low, a lower high, a lower low, break of structure, lower high, lower low, break of structure. Now, what's interesting is that here we have a change of character, which we're going to get into in the next one. But that is essentially the shift from bearish to bullish. So at this point, we have bullish 15-minute structure, but the 4 hour is bearish. Why is that? Well, simply put, that is because the 4 hour is coming for a pullback. So in every trend, you will have two phases. You will have a continuation and a pullback, continuation, and pullback, continuation, and so on and so forth. Now, in the continuation phase of price, you'll see both the 15-minute and the 4-hour in this example in the same direction. But when you see a pullback, you are looking at the 15-minute going against the 4-hour. Like we see here, when price actually goes and puts in a higher high, a higher low, a higher high, a higher low, and a higher high. That is bullish price action on the 15-minute. And then essentially what will usually happen is you will come into some area of supply on the 4-hour, like this, and then you'll get the reaction. You get a liquidation, and then you'll get another change of character. The change of character being simply just the shift from bullish to bearish. And we'll have a lower low, a lower high, a lower low, a lower high, and a lower low. And in the process of price going from bullish on the 15-minute to bearish on the 15-minute, which realigns with the 4-hour, you'll see the previous 4-hour low get taken out, and that will be your 4-hour breaker structure. And this will happen every single time without fail in reality. Again, we can see that we have a low, a high, and a lower low. So at this point we have a high and a low. Then price puts in a higher high, which again we know is our change of character. And then from there price puts in a higher low, higher high, higher low, higher high. Again, price will then come into some area of supply on the 4-hour time frame. You'll have another change of character where price realigns with the 4-hour, in which you can expect then this low to be taken out. And we have a lower low, lower high, lower low, lower high, lower low. So just stop for a minute and take that in. Again, 4-hour structure is bearish, but in between that structure of being bearish, you'll see the 15-minute flip from bullish to bearish, from bullish to bearish. Simply put, that is essentially just the 4-hour putting in higher lows, higher highs, higher lows, higher highs, or in this case, lower lows, lower highs, lower lows, lower highs, and lower lows. So when you see the 15-minute shift bullish when the 4-hour is bearish, you can be sure that the 4-hour is going to put in a lower high. And then when you see it realign, become bearish with the 4-hour, you can be sure to know that price is going to put in a lower low. That is essentially understanding the theory behind multi-time frame market structure. But what we're going to go ahead and do now is we're going to go and take a look at that exact example again on GBP USD. So if we come up here, what we can essentially look at is what we previously looked at with the higher highs and the bullish structure on the 4-hour. If you just slide slightly to the left, before we got into bullish, we were actually bearish. As you can see, marking out by the green, we were bullish. Keep this green. We're bullish, and then we actually shifted bearish. We had a change of character on the 4-hour. So what that means is from this high and this is a lower low. So that's your trading range. So because we've shifted bearish, what we're expecting on the 4-hour is a pullback and a breaker structure. A pullback and a breaker structure. And that's exactly what we get. Again, if we just mark that out, we'll see we have a breaker structure down here to the downside. Just let me remove this here. Then we have a pullback, and then we have another breaker structure to the downside. Now, what we're going to go ahead and do is take a look at what this looks like on the 15-minute time frame. And specifically what we're going to be doing is going into this piece of price action right here. So we're going to bar replay to come back, and essentially we're just going to start it here. Right, so for now I'm just going to go ahead and get rid of all of this stuff so we can keep it super clean, super simple. So this is where the 4-hour shifted bearish. So we have a high and we have a low, and that is the current trading range at that point. We have a high right here and a low right here. So what we want to go ahead and take a look at now is the 15-minute time frame. And don't worry if it looks confusing to start with, it's all going to make sense very, very simply. So again, what I'm going to do is just zoom in now, and we understand that here is the high and here is the low. So I just want to zoom into this price action right here. Now, once we zoom in, we get a clearer picture, right? So what we can understand is the 15-minute we're just going to start here, is bearish, right? We have a high, we have a low, a high, and then we have a break of structure. The break of structure happens here, right? And then we pull back, and then we go ahead and put in a new lower low, right? And then a new lower high. Now, here's something that's important. The size of a trading range can vary differently every time. What I mean by that is you can have a trading range that is that huge and then have a trading range that is that huge. What do I mean? I mean, take this low and this high. That is the size of your trading range, right? But then next you can pull back just a little bit, break just a little bit and start pulling back. Then you have a new low and a new high. And now that is your trading range. And that's much bigger than this. So the size of the trading range never actually matters. The point is, where did market break structure? Where did it pull back from? So you can see in here, the highest point right here, excuse me, actually, the highest point. So you can see that at one point we're actually bullish. We have a low, a high, price pulls back, puts in a higher high, puts in again, price doesn't break, so it puts in a higher low, price fails to break the high, and then comes all the way down here, and we were looking for a point in which the market reverses. The market doesn't reverse here, it doesn't reverse here, it reverses here when we have 1, 2, 3, 4, 5, 6, 7 bullish candles. So our change of character from bullish to bearish takes place in here. This is essentially our change character down. Then this high puts in this low right here. Then this high puts in this low, puts in this high. Then we have a new break of structure. Break of structure down. Again, look at this, how you can have a trading range that goes from, in this scenario, goes from this low to this high. And that is a fairly small trading range, right? From here to here. Versus you have a trading range that is this high to this low. That's a much larger trading range, but that's normal, that can happen. So don't worry about that too much, don't overthink it. So price puts in a change of character and it bottoms out here. Then it reverses, then it breaks structure, then it reverses, and then once again, it essentially breaks structure. Break of structure down. And then we're looking for the point in which price reverses again. Price doesn't then reverse until here, where we have this bullish momentum to the upside. And so again, this is then becomes our lower low. Price pulls up, lower high, and then we again, what? Break structure. Break of structure down. From there we break structure, then we put in essentially, if we pay attention, where does the market reverse from? So what we actually can see right here is the new lower low comes from here, because this is the point where market reverses again. So price puts in a lower low, pulls up, lower high, break of structure right here, lower low, and then here, this is important, this is what we're going to get into in the next session. So we do actually go ahead and make a higher high right here, right? And so that is essentially a change of character, and most people would be expecting price would just increase after that. But what I'm about to share with you in the next part, you'll think differently and you will understand it. So nonetheless, price does change character, it does put in a higher high, then it quickly shifts back to lower low. And then we have a break of structure, again, right here to the downside. After the break of structure, we are trading from where? From this high and this low. And so price comes back up into this area of supply and then puts in a lower high, lower low, break of structure, pulls back, lower high, lower low, break of structure. Now from there, essentially if we look at things, what we'll see then is price puts in a higher high with impulse also. So what do we have there? We have a change of character to the upside, change of character up. Now, if you're lost, don't worry. Let's take a little debrief and look at what's just happened. Right, if we zoom out, we will understand that the 4 hour swing high is here in blue, and the swing low is here. So now what we're expecting, because it's bearish, if it's bearish, it's going to be a pullback, continue, pullback, continue. But what we just learned was that inside of here, we're going to have a lot of internal structure. Let's make that a little bit more clearer. There's going to be structure within, right? Where we go bearish, bullish, bearish, bullish, bearish. So that's essentially all that it is. We have the low, we have the high, and now we're seeing the 15-minute is bearish, 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 bullish. It's shifted, first sign of it shifting back to bullish. So let's go ahead and take a look at what that looks like now. Now that price has shifted bullish, you can see that price then pulls back again, which is a higher low, go back to green, higher low, higher high, price break structure. So now it's confirmed that the 50-minute is now in a bull trend. What does that mean? It simply means that the 4 hour is coming for a pullback, because the 4 hour is put in a lower low, and now the 15-minute is bullish and the 4 hour is bearish, which we just spoke about. Is simply that the 4 hour is bearish and the 15-minute is bullish because it's coming back, and eventually the 15-minute will go back to bearish, and then we'll take out the 4 hour low. That's exactly what we're going to see right now. You ready? So price break structure, higher high. So we have the low and we have the high. Then price does what? Pulls back and creates a higher low from this area of supply. Then price pushes up, doesn't break it, pushes down, doesn't break it, and then break structure again, which is a new higher high. Break of structure up. So now we have our trading range, and our trading range is in fact this low right here, which only gets broken all the way down here, change of character down. So at that point in which price essentially changes character to the downside, we would be expecting that price would now go ahead and run this 4 hour low right down here. In this specific case, you can see what happens. We change character, so we have a breaker structure, we change character, we have a pullback, we have a new lower low, pullback, a new lower low, and then we have a higher high. So again, price has then shifted bullish again on the 15-minute time frame. So again, we know that the 4 hour is still in its pullback phase. It's had one change of character, and now it's had a pullback phase once again. So let's go ahead and take a look at what that looks like. We have a breaker structure to the upside. So the 15-minute is bullish, the 4 hour is bearish, we're in a pullback phase. You can still be taking longs on the 15-minute. Breaker structure up, price puts in essentially the high from there becomes, it pushes up, higher high, higher low, break of structure, higher high, higher low, higher high. So that's your new trading range of bullishness. Price is bullish from that high to that low. And now what do we get? We get a change of character, right? The low that put in the high gets broken over here, change of character down. Again, the first time didn't play out. We changed character, but we didn't take out the low. Second time, we changed character. We put in a high, a lower low, perhaps low high, just because this is a piece of market structure that after it breaks, it puts in a low, it starts pulling back, right? And it has 1, 2, 3, 4, 5, 6, 7, 8, 9 candles within the range. Puts in a low, lower low, break of structure. From there, we can see that we start pulling back again, right? Essentially expecting price to come out of some area of supply in here, and then we go ahead and break structure to the downside once again, break our structure down. Then what do? We put in a lower high, a lower low, we pull back, and then we go and put in a lower low again. And at the point of this lower low being taken, we can then zoom out and see that the 4-hour low has also been taken. So once the 4-hour low gets taken out, what do we have then? So now we have, if we remove all of this and we understand that this was the previous 4-hour low right here, and it's now been broken, we have a 4-hour break of structure. 4-hour break of structure. So where is the high that caused that break of structure? It is this high right here. This is the high that caused the break of structure, and this is the low where the break of structure came from, right? Now, this is where it gets interesting. Now we have a new trading range. We have a low and we have a high on the 4-hour. Again, if we go to the 4-hour and take a look at what that looks like, we will understand that we have broken structure, and this is the high and this is the low. So that is our new trading range. We have the low and the high. So what would you be expecting to happen? Well, you'll be expecting price to pull back up to some area and put in a new lower low. So what will happen on the 15-minute? Well, if the 4 hours bearish, but the 15-minute will be bullish, and then it will shift bearish, and then we'll take out the low. So let's go and take a look at what it's going to look like on the 15-minute time frame. And this is understanding multi-time frame analysis and pairing them both together. So what we see is, if we actually look, is the most recent low. You can see we put in a low, high, lower low, change of character right here, which then becomes our higher high. So that change of character right there confirms to us that the 4-hour time frame is now coming for a pullback. So we mark this as the change of character to the upside, and now we have our low and our new high. Then you can see price pulls back and then goes and does what? Puts in a new higher high. So then we have a break of structure. So now the 15-minute is bullish and the 4-hour is bearish. What does that mean? The 4-hour is coming to pull back. 15-minute is break of structure to the upside. And if we just actually replay price all the way back down to here, I want to show you something. For those of you who guys understand supply and demand and have watched our supply and demand videos or our order block videos, we will understand that in this range right here, we have this as our area of supply number 1, and we have this wick, which is a buy to sell in the lower time frame, supplier number 2. So if we was watching this as we were, then we would be expecting after the break of structure, when the 15-minute shifts back bullish, we now can use our understanding of multi-time frame structure to understand that we are likely going to wait for price to get what? Into here before shifting back bearish. And then once we shift back bearish, we can go and take out the low right down here. Hope that makes sense. Let's go back to it, the 15-minute time frame. So now we had a break of structure. Now we have the low and the higher high. And then if we just play price, we'll see price sits at the lows, built a decent amount of liquidity. Okay, so we've only just wicked the lows, nothing yet. Still only wicked the lows. Okay, now we've had a change of character to the downside. So we've shifted from bullish on the 15-minute to bearish on the 15-minute. Change of character down. But notice, we aren't in our points of interest, which we'll get into at different videos. So it's pretty much irrelevant. Now the change of character takes place, and then straight away we have some sort of news event that rockets price back up, and we have another change of character to the upside, continuing back to be bullish. And there's some very important information that's coming up in the next one that will make this make sense. Change of character to the upside, right? So now we're back on bullish. From there, you can see price essentially begins to pull back now and then break structure. So we have a lower low and then a higher high, higher low, higher high. So now we are break of structure up, again, the 4 hour is still in its pullback phase because the 15-minute is bullish. Once the 15-minute properly shifts back bearish from an area of supply as well, we will be understanding that now we will be expecting and waiting for this low to be broken at some point. So again, let's come back in and take a look at what price is going to do. Price starts to pull back. Let's speed things up. So price begins to start pulling back, and then we have only a liquidation of the lows, so it's not a break. We must have a break and a close. And finally, we do have a change of character. Change of character to the downside, out of an area of key supply. So we have a change of character to the downside. Now, essentially, we can begin to understand that perhaps this is the area in which price will now go and continue taking out this lower low right here. Could come up higher, could come into here, but it's very potential that price could essentially continue down from here. Only time is going to tell. Let's read market structure nonetheless. So what do we see happen? We have a high, we have essentially a lower low, a lower high, and now we have a new lower low. So we've had a break of structure to the downside. And now we're ranging from low, from high to lower low. Essentially just playing price out. Price pulls back up, taps into our area of supply, and then goes and continues its bearish structure. A new lower low has been formed, break of structure down from our 15-minute key area of point of interest, and now we have a new lower high and a new lower low. Again, just continue playing price out. Price comes back up, mitigates whatever it wants to mitigate, and puts in a new lower low, which is a break of structure to the downside. And now we have a new high and a new low. Again, waiting for price to play itself out. Price pulls back again. Comes back, what does it do? Mitigates our area of demand, our area of supply perfectly, and then goes and places a new lower low. Break of structure down. So what do we understand? We understand that the external structure, which is our 4 hour, from this high to this low, and it had a break of structure. So we understand that price is going to pull back into either this area or this area, and then go and take out the low. From a 4 hour perspective, that was our understanding. For confirmation and to get into the market and capitalize on this, we needed to get into the points of interest, have a change of character, and then begin scaling in our positions. Targeting what? The 4 hour lows. Targeting what? The 4 hour lows. Each and every supply and demand zone that causes new structure can be used as an entry model. Something we're going to get into at the end of the video to be more precise, but let's cut multi-time frame structure there so you guys can pretty much understand and see what's going to take place from a multi-time frame analysis. You can see then price essentially fails to break, pulls back. So we failed to break first time round. We have the pullback. Don't break the high, of course. Then we put in the low, then we put in a high, then we put in a lower low. So eventually we end up taking out the lows. Again, these are not entries that we would take. I'm going to show you how we would use it in future, but just examples of understanding how to play 15-minute structure continuations. And then eventually we take out the low. And then you can essentially see that price shifted back bullish here, continues in its pullback phase, because until it's broke the low, it's still in a pullback. So between this high right here and this low right here, price can do anything it wants to. It can become bearish and then bullish and then bearish and then bullish until eventually it's going to run the lows. It's just about where to get into the market. So that is multi-time frame analysis, understanding how to bridge the different time frames together to understand where price is going to go, and more importantly, why price is going there. Now we're going to be looking at the change in trend theory. Okay guys, now we're going to be looking at the change in trend. So how to understand when a trend is shifting and how to capitalize on it and continue the ride, right? The trend is your friend until it isn't, which essentially means that in this example we have high, low, lower high, lower low, lower high, lower low, lower high, lower low. Pretty clear to see that the blue dots marked here are making a series of lower highs, lower lows, which mean that price is bearish until it isn't. And how do we know that it shifted? We know it shifted when the recent higher low that puts in a lower low gets broken and we start to put in a higher high. That is what we call the change of character. Imagine a character is bullish and another character is bearish. Those are your two characters at any one point. The market is either bullish or bearish. And the shift from bearish to bullish or from bullish to bearish is a change in character. So the change in character occurs when we have a series of lower lows followed by a higher high, a break of structure in the opposite direction. Then essentially we will expect to see price continue bullish, expecting a series of higher lows, higher highs, higher lows, higher highs, until eventually we see a lower low, which is a change of character, lower high and lower low again. And then that would essentially be your change in trend, right? That would be your change of character to the downside this time. So let's take a look at what that's going to look like on the actual charts themselves. So let's clear these dots. Now what we have here is GBP USD on the 4-hour time frame, same as what we've looked like, same as what we've looked at previously. Let's remove that. We can see that in green right here we have bearish, pullback, lower low, lower high, lower low. So safe to say then that the 4-hour is bearish, right? We have a breaker structure here and we have another breaker structure to the downside here. Now marking out the high that caused the breaker structure, the reversal point, that is the high that we're currently trading from. So what you would be expecting to happen in reality is that price would respect this high and go and continue and put in a lower low. But in this case, what you can see happens is we break it, we put in a higher high. That is the first sign that the trend is actually changing, which is a change of character. From there, price puts in a higher high, pulls back, higher low, new higher high. Once this higher high right here has been confirmed again, that is our solid evidence to confirm that we are now in a bull trend. So the change of character is the first possible sign, but the change of character followed by the break of structure is indeed the confirmation. And so why I said this would be relevant is because we've seen it before, right? We can have something that looks like this, right? Which is to say we have a high, low, lower high, lower low, lower high, lower low, higher high, change of character, but then we're going to put in a lower low. What's the reason for that? Sometimes the high and the low that we choose, or more importantly, these two ranges in here, this low and this high right here, by our rule, by our definition of market structure based on how many candlesticks that price pulls back, maybe the market in of itself didn't consider that a pullback, right? And that's just something that we have to accept, and that's part of the game. It's just all about probability. There's a probable amount of times you're going to be wrong, but that's not what's important. What's important is the probable times you are right, what's the risk to reward? So without getting too much into kind of risk to reward and risk management, we can just understand that this pullback that we thought was in fact a pullback, the market didn't deem it a pullback. And so we changed character and we continue to put in a lower low. Now what's important is, although this change of character happens, we will still be looking to go long, because by our definition, it is a change of character. And we would be expecting probably something like this. Again, in this situation, it didn't happen. The good thing about this is we need confirmation. So when we change character, we'll have an area of demand we need price to come into and give a lower time frame, multi-time frame analysis, change of character on the lower time frames. And that will then allow us to get into the trade. Most of the times when this happens and then we run the lows anyway, there was no confirmation to get into the market. So it doesn't really ever matter. With that being said, we're going to be going into, in the next section, a look at how to use everything we've just learned and put it together to get into a profitable trade. Let's go back up to the charts for a second, because what we see is we have the change of character to the upside, we pull back, and then we have a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and so on and so forth, expecting higher lows and higher highs to continue. So you can pretty much see how we go from essentially bearish to bullish, and then continue using this understanding of the change of character. In the next part, the bonus part, we're going to be looking at how to use all of this to get into a profitable trade. Now we are into the best part of the video. That is, how do we actually use it to get into profitable trades, right? So here we are on the 4-hour time frame, and as you can clearly see in the blue highlighted markers, we are in a uptrend, bullish on the 4-hour time frame. You can see that we're putting a higher high, we've pulled back, we haven't broken the low, and from here now we need to see the 15-minute realign with the 4-hour, because on the way down it's likely that the 15-minute was bearish. So we need to see the 15-minute shift back to bullish. Then on the 15-minute, we're going to be taking trades from the 15-minute time frame when it shifts back to bullish into our point of interest. On the 1-minute time frame, wait for the exact same thing, because when the 15-minute pulls back, the 1-minute is going to be bearish. When it gets into our point of interest and the 1-minute realigns, we can look to take our trade from the demand, taking out the 15-minute week high. And we can also be looking at targeting the 4-hour high for our second take profit. So let's dive straight in. 15-minute time frame. So here we are on the 15-minute time frame, and I already have it marked out for you. So this is the low on the 4-hour. You can see that after the low, at the current point in price put in the low, we were bearish. We had a high and a lower low. After the lower low, we put in a higher high. After the higher high, we pull back, we break structure, and then we change character, we become bearish. So at the point we are bearish, we're not looking for longs, we're waiting again for price to shift back to bullish. If we draw across, we can see we had another break of structure, bearish, and then finally we had the change of character, where we shifted from lower low, lower high, lower low, to create a higher high. And now essentially our entire price leg on the 50-minute is this low to this high. Now some of you may ask, how is that possible to have such a large trading range? Let me explain this to you. Right, where we change character is here, and the low before that is this one. It's not this low right here. As I explained to you guys before, if we map it out of what that would look like, it is not this low. This is not our structural low. This is the low, because this is the low that caused the break. If it was, for example, a break and then a pullback and then a high, yes, that would be the low, but it's not. As you can see, the change of character is here, so the break of structure has to come up here. You can see we put in the high, we pull back, and then we break. So this is the low, right? Just wanted to get that out of the way and explain that to you guys. So now we understand that we're ranging from low to high. And what we're waiting for in this scenario is price to get back into the lower 50%. So anywhere below this line here, down here, we can look at trading the change of character on the 1-minute time frame. We need to see the change of character on the 1-minute time frame. So we go into the 1-minute time frame now and understand that we're coming out of this area. What we will see is on the 1-minute time frame, what we will see is that actually on coming down, the 1-minute structure was low, high, lower low, lower high. Yes, we wick it, but we don't break and close it, remember? So it's a lower high and then lower low. So at that point, we're ranging from this high to this low. And now it takes a very long time, as you guys can see, before we actually go ahead and break that high and put in a higher high. What's the reason behind that? Essentially, the longer price gravitates in one area, the more orders that the banks are stacking in that area ready to deploy. So it's a good sign when price sits in an area for a decent amount of time. That's essentially what a range creation is. Eventually, we do actually break. Now, here's what's important. The low is still this low, right? This is the low down here that I'm pointing out that broke and changed, and this is the high, right? Or this is the high, which we'll get into in a minute. So that's where we actually broke and changed character. Now, the thing is what we explained before, that, yes, granted, let's say price is bullish in this scenario, and then price does something like this, pulls back and then breaks. This is the low. However, typically speaking, when we have that interaction with supply and then we have the pullback and break, usually price will come to the most near point of interest and then break from there, typically speaking. What do I mean by that? I mean, in this scenario, this is typically the area that you'd probably most likely see the reaction from. Now, in this case, it doesn't happen, but still the lesson is that. So what we actually see is price changes character and puts in a, what? A higher high, right? And then we pull back and then we put in a new higher high. So our trading range goes from that super huge range to just literally this high, this low and this high. Then we have a change of character. So the 1 minute shifts back to bearish. So we can't be trading and trying to long price if the 1 minute is bearish. We need to see the 1 minute being bullish. So we need to now track price. We have a high and a lower low. So we need to see a break above this high right here if we want to get back into the market, providing price doesn't go and make new lower lows. So if we pray price, what do we see happen? We see that price puts in a lower high and a new lower low. So another 1 minute is bearish. So we're waiting again, just like we waited for a long time before, for the 1 minute to go bullish, we're waiting for the 1 minute to go bullish again. We're only interested in taking the 1 minute bullish when the 15 minute is also bullish, which now it is. So essentially price doesn't break it, that's not a break. That is just a liquidation. It needs to break and close like that. That there is the change of character, and that's exactly what we were waiting for. And that then allows us to get into the market. Change of character to the upside right there. And then we can look at taking our trade from the demand level. So we have an area of demand that's clear in here, but typically when it's not the cleanest area, I will go to the 2 minute, maximum the 3 minute, to kind of get a clearer understanding of where it is. So in this example, we can see that the actual demand zone is this right here. We're actually going to use the demand zone on the 2 minute time frame, which would be a 2 pip stop loss. We're actually going to cover the low just to be extra cautious, add a little bit for slippage, puts 0.2 pips in there for spread because we're long and spread has to be on the buy side. And then we're going to be looking at targeting what? Well, simple. If we look at market structure, when this happens, when price is here, where are we expecting price to go to? This is the 15-minute time frame right now. We're expecting price to go and make a higher high. So if we're expecting that, then that is our take profit. That's how we manage our take profit. So if we go to the 15-minute time frame and we actually zoom out for a second, we will understand that our take profit, or our main area that we're expecting price to hit, is this area all the way up here, which if we would have held that entire trade for that entire duration, that would be 20.63 risk to reward with a 4 pip stop loss. Now, personally, what I like to do is make sure I take profits off early enough so that I'm not emotionally sat here while price is going up and down, up and down, up and down. So what I will do is I will take off half of the position at 5 risk to reward. Typically, this is a 20 risk to reward trade, but we don't usually get 20 risk to reward trades. Usually trades are between 5 and 10 risk to reward, and sometimes you will have the big ones depending on the price range of the 15 minute. Let me explain that. Imagine, for example, you have a 15-minute time frame that has a range like that. That's a pretty big range versus when you have something like that. So you have, of course, if you get into a trade here and you're targeting here, it's going to be larger than getting into a trade in here and targeting here. And typically the 15-minute ranges are a lot smaller than what you're seeing right now, typically speaking. So I always like to take profits off and make sure that I have profits locked in, 50% at 5R, and then letting the rest run all the way here, because at the end of the day, when there's money locked in the account, that's the main thing that actually matters. So that is essentially the position that we'll be looking to take, and then what we want to go ahead and do is pull risk down until we get to a 1 to 5, so I can take 50% of the position. 1 to 5, so at least I can take 50% of the position off and already have locked money in the bank. right? 1 to 5 risk to reward. So you can see price wicks in perfectly, reacts again, and at this point we go to break even. So we want to be going to break even as soon as this high has been broken. Once we've had another break of structure, we're going to get stop loss to break even, and we're going to be looking at securing partials at this 5R. The reason we go so aggressive on break even is because the most important thing is preserving your capital. It doesn't matter to me if we get a break even now, if price comes all the way back down to here, taps us out for break even and then goes, because we will get back in here and continue riding the wave. Risk management is the most important part of trading. So let's just see how price essentially plays out. There you go. Price runs straight to 1 to 5 risk to reward. That is where I would look to take 50% of the partials off and then letting the rest run for the entire duration at 20R and potentially even getting in scalings, right? What do I mean by scalings? Waiting for a pullback and then another break of structure. Let's see, right? Okay, price pulls back and then price breaks structure. So in such a situation where prices broke structure again, take the area of demand and look at taking another scaling. We're risk free on this and we've already taken profits. So again, another 5R and then let the rest run to the highest point. Excuse me. Let's see how price plays to that. Price pulls back and it misses our entry. No problem. So at that point, as soon as we get the next break of structure, we remove the order. Then where do we get back in? We look at, again, the area of demand that broke structure, which is here. So we could look at getting back in here, stops just below, 5 pip stop, again going for a 1 to 5 risk reward. This is how you could plan on scaling into your positions after you've locked in profit and move stops to break even. So let's essentially see how price plays out there. So price misses our entry by a minuscule amount of pips, which is just unfortunate, just one of those things. It can happen. And then break structure again. The key here is not to get emotionally involved, not to get emotionally attached, just continue playing the continuations. Again, price break structure. So now we have a new trading range. So we can look at getting back into the market at the final sell to buy that we use as our demand area and continue for another 5R if it's there. 5.1 pips, 1 to 5 risk to reward, and play it and see kind of what happens. Price starts to pull back. So still no tag. And then runs straight to take profit. Again, another situation, unfortunate, we miss by very few amount of pips. If even a pip, to be honest, that's probably like 0.3, 0.4 pips. But it just is what it is. We can't sit here and emotionally react to that. So we can essentially look at taking more positions. Again, no clear area, so I'm going to go to the 2 minute, go to the 3 minute, and then we're going to be looking at taking what? This. And again, an additional 5R is what we're looking for. Pull it back to the actual demand zone, add a bit for spread, 1 to 5, and then take partials up here. So price tags in, hits stop loss, and liquidates out. Again, is what it is. It's a -1. Nothing you can do about it. You have to stick to your rules, stick to your plan. It's not always clean, it's not always cute, sometimes it's messy, but it just is what it is. So take a stop loss there, which is totally normal. Perfection doesn't exist. And then we run straight to the higher time frame take profit, in which we have a 20.68 risk to reward, fully locked in. If you guys want to learn more in detail about everything we've learned today, plus more liquidity, supply and demand, and even more structure, apply to work with us. The link will be down below in the description. Thank you guys.